presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Al in Tampa. Hey, Al, what's going on?
Oh, it's a beautiful thing. I mean, if your listeners don't get the gold report, they're missing out. I mean, with your gold report, you just printing money. I love it.
You're my best ad out there, Al. Let's go to Jeff in New Jersey. Hey, Jeff, what's going on?
Great. Hey, listen, I was calling to thank you. A few weeks ago, you were prompting on your show to fill out that $10,000 grant.
Yes.
So I filled it out, and just a couple days ago, I found $1,000 in my business checking account.
That's awesome, man. That's awesome. Yeah.
And I owe it to you, because if it wasn't for your prompting, I would have just assumed, no way I would have gotten anything. So I wanted to thank you.
No, we appreciate you growling a problem with us here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien at TFNN. We go 5 days a week. We go 7 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great week, folks. Let's take a look at one of our 4 agreements. Serve the one you love. Once you decide to be a couple, you're there to serve the one you love, to serve your love to your lover. And every kiss and every touch, you feel you're there to please the one you love without expecting anything back. Market-wise, let's take a look at it out here. We have the Dow Industrials down 165, Nasdaq's off 255, S&P's off 44, gold contract down $10, trading at $17.32 an ounce. You get silver down 17 cents, $19.06 an ounce. Light sweet crude down $1, $103.83 a barrel. Notes and bonds. The 10-year note up 24.6, trading 118.12. The 30-year off a full point plus 29.6 at 138.24. And King Dollar. King Dollar is raging up there. 1,023 ticks at 108.03. The euro, folks, is par. Time to go to the Amalfi Coast and get some euros. You got the pound at 118, and the yen is trading out here at 137 to $1 US. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, we take a look at this. What you're going to see, yeah, you're backing down, but you get volume that's contracting out here, folks. So the bottom line is that I expect you're going to more than likely go for the swing point that it didn't make on Friday. The swing that the market's trying to get to is this 393. On Friday, we got up to a price point of 390. It closed out at 388. You're backing down now. And yeah, it's Monday, but the bottom line is that you don't have a lot of sellers here, man. You get 39 million shares traded. You're backing into 64 million, and the NDX is doing the exact same thing. So we'll see how this baby shakes out. NDX right now, you're backing down 39 million shares, 3 Qs. You're down $6.50. That being said, you're coming into 56 million, and I suspect you're going to build a little more cause, get up to that swing point. We'll see if, in fact, that swing point can hold or it's going to fail, and it's going to be the good old U.S. dollar. The dollar, folks, okay, is on the tear. The next swing high is at 121. That being said, bottom line is that dollar goes to 121, this market's still going to go lower because that is raging right now. Let's get over to our man, Mr. Dave Mazza. Dave is the head of product and managing director at Direction. And, of course, we normally have him on every other week, but because we had so many holidays, man, we haven't seen him in a few weeks. Dave Mazza, good to see you.
Hey, it's really good to be back. Thanks for having me.
Totally. And needless to say, this market, when you look at your lineup at Direction, it's really cool, man. I mean, because we could get into whether it's oil, whether it's the banks, whether it's the bonds. And, as you come over to TFNN, folks, okay, you hit that Direction banner, you're going to see all of those, including the market, is moving really well. And we do have bull positions and bear positions in those sectors. So this has been quite a market, huh, Dave?
Yeah, no, you're absolutely right. I think the volatility that we spoke about at the beginning of this year and really we haven't spoken in some time here, as you noted, has just only increased. In fact, last week we saw some nice upside volatility.
Yes.
And now, again, coming in here on Monday, with a pretty decent sell-off. But as you noted, kind of on decelerating volume, what I'll note across our lineup is we have seen volumes come down a bit across the suite, but they've actually been supported by volume on the bear funds. So while some of the activity has come out of bull funds because it's been difficult to find a bull market anywhere here,
sure,
we have seen traders come into bear funds really in a way that we hadn't seen throughout much of the pullbacks. And part of it's, I think, just simply because, now we actually have the correction that a lot of folks were calling on in the S&P 500, let alone the NASDAQ.
No, there's no doubt. And, folks, when we start talking, the financials, the FAZ, the FAS, when we start talking the small caps, the TNA and the TZA, as you're looking at this market, they're really both. It seems like both sides of those, Dave, are getting some action. You might have something different. But I can see both sides. It just depends what day it is, right?
You're absolutely right. So I think what we really are seeing, I'll take those separately. So the FAS, that's your bull fund.
Yes.
FAZ is your bear fund, right? And there's an opportunity for financial stocks from what the ETF covers. We are heading into, I think, again, talk about unprecedented, a really important earnings season, particularly for the banks, because a lot of money, more long-term money started moving into financials as interest rates started to rise. Now we have an inverted 2-10 yield curve again. There's going to be questions about what does the trading environment look like for these banks. Investment banking revenue may be coming down. So Thursday, Friday, that's why we're seeing activity in both sides, because it's unclear, what is this going to look like? So I think you got bulls. It's still people saying that this is the time to be bullish. Others are getting bearish quickly. Small caps are really interesting. Your TNA and your TZA. Small caps, man, have they been smoked.
Exactly.
I think every, like you've talked about before, when this comes around, they're extremely attractive from a valuation standpoint. I don't think you should be trading leverage inverse products on valuation, but for people saying, man, they've been beaten up, it's certainly been the case. However, they're pricing in that recession risk. And if we actually end up getting that recession, which many people are now assuming is a foregone conclusion, small caps are going to take it on the chin. So hard, again, what I like is that we have the bulls and the bears here so that traders can take advantage of both. So that's what I would recommend. Depending upon your analysis or your viewpoints, you get both sides of the trade for really important financials and then the small cap space.
And what's so amazing, Dave, is that so picture, folks, the last big downdraft we had, of course, was 2008. Okay, bottom line, I don't see this as 2008, but that's the last downdraft. The thing that's intriguing to me, Dave, is that when we start talking inflation, you have those TIPS funds, okay, which are really cool because the TIPS have really, and the TIPS are inside it's all about the bonds and the TIPS, folks, okay? But there's so many people around that never seen inflation.
Correct. Yeah. Not for 40 years.
And that is going to be the wild card for all of us. Pretty amazing. Well, listen, it was great seeing you again. We look forward to having you back 2 weeks from today, Dave.
We'll talk soon.
Thank you. Have a great one. Have a safe one.
Thank you.
Stay right there, folks. We'll come right back. Of booming inflation, where your purchasing power is eroded, there's no better place to protect your hard-earned money than in gold. Vista Gold's flagship asset is the Mount Todd Gold Project in the Northern Territory of Australia. This is Australia's largest undeveloped gold project. We are talking a world-class gold project in a Tier 1 mining district. This is a large-scale, low-cost project with significant existing infrastructure in a politically safe and friendly mining jurisdiction. Vista Gold just completed the Mount Todd feasibility study, which resulted in a 7 million ounce gold reserve in a 16-year mine life. All of this, combined with the approvals of all major operational as well as environmental permits. This distinguishes Mount Todd as an attractive, de-risk partner, ready development stage gold project. Vista Gold trades on the New York Stock Exchange under the symbol VGZ.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today. And try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow Industrials right now trading down 183. We get the NASDAQ off 257. S&Ps are off 45. Let's get over to our man, Mr. Steve Rhodes, as we do each and every Monday at 20 past the hour. And don't forget, folks, Steve has an outstanding show here every trading day, 1 to 2 Eastern Standard Time. Also a great newsletter, Mastering Probability. Now, it's very easy to get Steve's newsletter, folks. You come over to our website at TFNN. You're going to hit newsletters. You're going to see it right on the top row, the right-hand side. You just hit subscribe. You can get the newsletter for 1 month for $149. You can get it for 6 months for $695, which is a savings of $199 or 22%. And you can get it for 1 year for $1195, which is a savings of $593 or 33%. Now, they all come with a 30-day money-back guarantee. So check it out as you get over there and you subscribe. What you're going to see, folks, is that Steve has a lot of great archives on there. You know, you hear him talk about the TD count. You hear him talk about the other, Steve's, the momentum indicator. He has all of that right in his website. Once you get the newsletter, you're going to have all that information and really get to understand it so that you can basically be in and out of markets by yourself. Steve Rhodes, what's going on?
Well, probably like yourself, just trying to avoid the heat, if that's possible. It's been extraordinarily hot down here.
Exactly. No, it has. There's no doubt.
And I look forward to my weekend time because it gets me out on the golf course. But and I've been playing. And but I tell you, I walk out that golf course, I am soaked as can be.
I bet you are.
5 pounds less at least, and I'm sucking down Gatorade and water, for that 3.5 hour period. So, but I am looking forward to this weekend.
Well, listen, next fall, okay, so at Bel Air, right? So at Bel Air, folks, they have 2 Donald Ross courses. Well, they're doing one of them over, right? And so the way I guess it works, so Donald Ross, folks, is a famous golfer and architect.
Absolutely. Yes.
So they have these new designs, that company of doing them over. So they're putting $8 million in it. So it's going to be ready in November. So you have to come over and we'll play golf up there.
That sounds great.
Steve, you should see the course. It's insane. I mean, they got hills. It's on. You're looking at it like you just can't believe it. It's kind of pretty cool.
Yeah, that's great. I like this week. I'm looking forward to because we've got the British Open Championship. So, and what I like about that is because of I heard you talking about, hey, now's the time to go to Europe for sure.
Right.
But what I like about it is usually, and I'm an early riser, and usually in the gym by 6 in the morning or so, and but So it's nice is typically you can watch I wake up early,
Yeah.
so I can turn the TV on like 6 or 7 in the morning, and watch the British Open.
Right in it. Nice.
Yeah. So hey, let's talk a little bit about the markets.
Yes.
Which right now, as I take a look at them, the markets have generated several real mixed messages. So for example, if we take a look at the weekly charts for the Dow, the S&P, and the NDX 100, so these are the weekly charts, they mentioned one of the indicators that I use to identify a bottom. This is the Rhodes Momentum Indicator signal, and it's this little black line that is drawn there. Now, I don't draw that. I've got this automated on the system, works for all time frames, and then the way that pattern gets, that's a pattern that tells us the market is stretched. So the market was stretched on a weekly time frame, and this tool identifies that. And the way that you get a confirmation of a bottom is we just get a bullish reversal candle, and each of those formed bull sash candles that confirm that pattern. And so that tells us that we've got a bottom on the weekly time frame chart, on an intermediate. And these patterns on a weekly time frame, Tom, they just don't form that often. However, one of the other tools that I use are the TAS market profiles. And if we take, and this is for the S&P 500, this covers 4 time frames, weekly on the left, daily, 240, and the 60-minute out there. And we take a look, we were just talking about the weekly time frame chart, it's still in pretty significant bearish territory. And what I mean by that, folks, is the way that the market profiles work is they help us to identify where buyers are, where sellers are, and if price can overcome sellers, that would be above the top of a profile, and that would be bullish. Well, in order to have this indicator on the weekly chart in the red zone, tells us there's more instruments trading below the bottom or the support level of those profiles. So that says that this is going to be a rocky road. Not this is, and if we take a look at these other time frames out here, the 60-minute wasn't a bearish crossover. The daily isn't a bullish crossover out there. So in the way that a market would be truly bearish or truly bullish is all these dials would be in the same setting position. They'd either be in the red position or the green or blue position out there. And so we've got a mixed bag here. If we take a look at the weekly market breadth for the NDX 100, we have the same kind of signal out here. You've got the weekly and the 60-minute that are in the red zone, and the daily and the 240 are in the green zone out here, so which is bullish. So we really have a significant set of messages that are pointing to something. We'll get to that sometime. Okay? So if I look at, I talked about the weekly time frames and how those had formed bottom patterns. If we look at the daily contracts, here's the equity futures. So you got the ES, the NQ, the Dow, and the Russell 2000. I have each of those confirming by the D point patterns. They're the larger by the D point patterns out there. And on this chart here, you can clearly see the blue lines represent the TAS market profiles. So if we take a look at the ES Mini, it is trading above the top of its profile. So it's basically on a daily basis in a bullish breakout type mode out here. But if we look at the other 3, and now just one index is not going to be able to pull the others, although the NASDAQ is pretty strong. But if we take a look at the NASDAQ over on the right-hand side, where price found resistance was at the bottom of its profile. Now, folks, when price closes below support, oftentimes that can become resistance. And last week on Friday, that is exactly what happened. It got up to the 12,197 level and gave it up. If price can close above 12,197, we're talking about the NQ here, well, then we'd likely see a move up to 12,517 or 12,837. But the ES Mini is the only one that is trading above resistance, which right now is support. So the mixed messages, they sort of make sense and point to really what is just simply a choppy market out here. And this choppy market, Tom, is likely to continue until October. So how do I come up with October? This is the 72-year chart for the S&P 500. And what I've selected here, this is provided to me by the folks at Seasonex, and it's a very cool tool because what this allows me to do is allows me to take out and see how has a market traded during a midterm election year versus just generally speaking. And here what we can see, this red line represents where we're at. So if we take a look at this is the S&P 500 chart for a 72-year period. It really kind of shows a choppy period, and a choppy period until we get into the early part of October, and then the market should take off to the upside. If we look at the 36-year chart for the NDX 100, it tells us a different picture. This sort of tells us that we're going to rally the rest of this week, and then we start to move lower out there, in kind of a significant way, at least until the early part of August. And if we take a look at the 125-year midterm election chart for the Dow, this too is saying we should top late next week, and then more chop, and then finally in the late August timeframe is when we get a swoosh to the downside. So what in bear markets, and all that makes sense. You and I talked about this before.
Yes, it
here's
does.
Here's the 2007 bear market, and I want folks to look at these black arrows. This is a weekly chart, and the typical counter trend move is a 2-week rally, 2 to 3 week rally. Well, last week was week number 1. And so this suggests that we should see a move higher this week. You talked about the volume today. And so we should see a higher close this week over last week's close. And then it might be curtains. But expect a choppy market through October.
Gotta love it. And listen, folks, okay, come over to our website at TFNN. Go to the newsletters. You hit newsletters. Master and Probabilities on the right-hand side. Hit that baby. Hit subscribe. Yeah, Steve, I see exactly. I mean, I think we're going to run for 2 weeks. And I know, bottom line, that late August, I like that number. I like that number.
Perfect.
Cooking, man. Have a great one. Have a safe one. Stay right there, folks. Come right back.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, JDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now trading down 170. You get the Nasdaq off 249. S&Ps are off 44. So let's go take a look at Twitter, TWT, because what we're going to see on Twitter, folks, is going to be really cool to see how this whole deal works out when, all these big law firms say, let me walk you through this because this is going to be really cool. So what you have is this, okay? So what ends up happening on these brawls is that everything goes to the Delaware Chancery Court. Now, the way the Chancery Court works is this, folks, okay? They're quite familiar with takeovers, corporations, the whole bit. There's no jury, there's a judge, and that's it. Now, so listen to how this is going to shake out. So, first off, the Twitter, on their side, they have heavy hitters in the context of who their attorneys are, and they've been through this, I'd say hundreds of times, right? Now, Musk lawyer is the same, but he has one other thing going from that, which is pretty amazing. And what's going to happen is that not only you and I and everyone else going to be looking at this because it's Elon Musk and Twitter, right? But check this out. This is what's going on. His attorney, okay, was the main judge for the Chancery in Delaware, okay? And this is how it always happens. You know, you end up being an attorney, then you go to be a judge, then you come back into private practice, okay? But that's not it. Here's the deal. And I remember this deal because we've been doing this a long time. What had happened is that Tyson Foods had gone after another company. And what ended up happening is that simultaneously, this happened in 2008, 2009. It went to the court, and the court ruled, and it's actually Musk attorney that they call, his name is, starts with an S. The bottom line, check this out, you're going to crack up. So he ruled at that point that it didn't matter if things are falling apart or what's going on. You went after this other company. Bottom line, you have to pay up. Okay, so since 2011 and we're 2022, that's how it's been in every single case, cut and dried. Boom, 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 boom. So now what's going on is this, is that this is his attorney that's on the other side of this now. So they've had many cases that because his attorney, when he was the Chief Justice of the Chancery Court, the decision is named after him, of course. So now he's going to break his own decision. So this is going to be cool watching. I mean, just in general, you know, because that's how cut and dried it is. And when he made the decision in 2011, he wrote up that it didn't matter what you did. Okay, the bottom line is that, you know, if you didn't do your homework, that's your problem. If you didn't do this, that's your problem. If you didn't do that, that's your problem. So it's going to be intriguing watching this whole thing shake out. Most times what happens is this. Most times is that they start at this point and they do some kind of negotiation before it gets in front of the judge, or when it's in front of the judge, they start getting an inclination as to where the judge is going to rule, and then they make a settlement. So we'll see where it's shaking out. Twitter itself, it's down 375. It's going to go after a swing point, man. You know, bottom line, the swing's laying out there at 31.30. I suspect it's going to go after it. That's how this is shaking out right now. Some of the higher volume equities that we have out here today in the marketplace, you have Advanced Micro is down 220. You got Amazon off 363. They're coming into their deal days. I think that's they call it something else, but the bottom line is that they're coming into their big days. Nvidia is down $6. You got Tesla's off $45. We have Occidental down $1. If we go into the, let's go take a look at a couple of these banks. When I was just talking to man Dave Mazza from Direction, it's so intriguing with these banks. There's no doubt that, even J.P. Morgan, I mean, the bottom line is that J.P. Morgan is trading, deep into the March bar, man. The top of the March bar is 122. J.P. Morgan's at 112 right now, So we'll see how this baby is going to shake out. If you were listening, Larry has an amazing show, folks. And if you haven't heard Larry's show in the morning, you got to listen to it, 11 to 12. Well, he had a guest on. He has him on. Let's see, Tim. I forget whether it's Nom Winsky or Tim Boss. Let's see. Someone give me help in here. 1 second. The bottom line is this, okay? Nom Winsky. Thank you, Duffy. Nom Winsky. So check this out, folks. This is really cool to know. So these guys go back. I mean, they really go back. So it's really cool understanding. And he was given a little history today. And what the history was, folks, was this. You're going to crack up now. So this guy, he said that this is going back in the 70s. In the 70s, he inherited some money, ended up buying a seat on the CBOE for $25,000, which was inexpensive. But the biggest story, I thought, was that he was talking about, so the Dow Industrials bottoms, folks, in 1974. And he was talking about, listen to this is amazing. So in 74, you could buy a seat on the New York Stock Exchange for $25,000. $25,000. And listen to this. The New York Stock Exchange had a regulation in place that if you had a seat on the New York Stock Exchange, you could not have a second job. And of course, what they were worrying about was the fact that, you say you have a seat in the New York Stock Exchange and you're selling hot dogs outside and hamburgers outside. Well, the bottom line is that they had to actually change that rule so that people could actually have a second job because there was no money in the markets. I mean, that is so hard to even, I was driving into work this morning, that's even so hard just to even comprehend, right? But the bottom line, that's how it shook out. And of course, at this particular point, I never paid attention to the Dow until it was at 803. I think it was in 1980. Because I remember the first time that I was getting my head wrapped around, it was 803. But I thought that was quite a story that, as to the aspect of how markets cycle. So check this out. So he was also telling a story. This is really cool. So he was telling a story about the aspect of he had a couple big aspects that were coming up. This is in 1987. So he had 3 seats on the option exchange, the CBOE, the Chicago Board of Trade, and 2 of them were mini seats and 1 was a full seat. And what he decided to do is that he felt that there was something coming on before the crash of 87. So he sold the seats in August before the October crash. I mean, it was really cool stuff, man. I mean, you can replay that segment, folks, if you go to Larry's. But it's really amazing to me that, you can see what the baby boomer generation brought accelerating up. And now what you can see is the millenniums that are coming after it. More people, guess what? Price and volume. They buying, are they selling? What are they doing? Dow Industrials right now down 184, Nasdaq's up 252, S&Ps are up 44. Stay right there, folks. We'll come right back.
Vista Gold owns and operates the largest undeveloped gold project in Australia, the Mount Todd Gold Project. Vista Gold just completed their feasibility study, resulting in a 7 million ounce gold reserve. Vista Gold has all major permits approved and has retained CIBC capital market assistance in evaluating alternatives and in completing an accretive transaction. Vista Gold trades on the NYSE American and TSX under the ticker symbol VGZ. Vista Gold, executing a strategy to create shareholder value.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. Dow Industrials right now down 245. You get the Nasdaq off 246. S&Ps are off 43. And there's no doubt we get a lot of info coming in this week, folks. And I'm telling you, man, the CPI is going to come in hot. That being said, though, I actually think that we're going to be bouncing a bit here because this pull. So what happens on pullbacks like this, folks, is this. You come down hard. You come down hard, and then you basically can't come back just as quick. It's really hard to get up that type of energy without building cause. And, bottom line, you looked 3 months ago, the SPY was trading at 462, right? Well, it went straight down to 380. Then you did a nice bounce up to 417, okay? That's a, 37-point bounce, right? It's pretty intense. Then you go straight down again. Well, what should happen here is that even when, to get to the larger ABC structure on the way down, each one of these downdrafts will be smaller than the initial downdraft. The initial downdraft was vicious. But the problem is that there'll be downdrafts. That being said, this looks to me right now that you might get, a nice bounce going, and we'll see how it can handle the 393 area. If it handles it, then you're going to get that bounce all the way up to the 417. And it's going to be about this U.S. dollar. The bottom line is that it's certainly not backing off today. It's not even close to backing off, actually. The euro is just ready to crack. Now, in both cases, though, the euro is setting up a last engulfing on the way down. And let me see, the DXY. And it looks like to me, you're close on the dollar. Yeah, it's a last engulfing on the way back up. So this is how a last engulfing works. A last engulfing in candlestick charting is, it looks like a bullish occurrence, okay? Well, what happened is this, is that it opens, the dollar opened almost at the lows of Friday. It keeps going higher. And after an uptrend, that's called the last engulfing. Now, what ends up happening is that in order for that pattern to be effective, it would have to close down tomorrow. Right now, it certainly looks like 121 is going to be game. The reason that, there's a couple different reasons I'm thinking that we're going to back down. To me, this S&P wants to bounce. If the S&P wants to bounce, that is saying that the dollar is going to get a pullback. We're going to see all over the place the euro at par, okay? And, bottom line, if you think you're going to go to Europe, in the future, bottom line, there's no reason not to, get some euros. And when you're getting them, make sure that you know that what the price is. Because I can tell you this afternoon, Bestford was calling. We're next to each other upstairs. He just called Chase, and they couldn't give him a bid. They said, well, it's going to be around par. He said, well, I want to know what it is. He left the office. I'll be able to tell you tomorrow what he got them at. But I told him to buy, half of what he was going to buy. Because if it does go to 87, that means the bottom line is that the euro would be at 120. Okay, well, you'd be able to get 120 euros for $1. But at par, it's not bad, man. That's there's no doubt that's not bad. Let's go take a look at the GDX. Okay, so yeah, let's get into this a little. So we take a look at the GDX. The GDX out here. You had a low that was established last week. That low was established at $26.04. You're at 26.61 right now. You're pulling back. You have light volume. What we haven't had inside of the gold market is that you haven't had prices that can stick. We certainly have been coming back with dramatically lighter volume, but the prices haven't stuck. Inside the gold report today, I did step back inside the market. That's the bottom line. The dollar's not cooperating right now. The equities that we have aren't bad, okay, but then they're flat. Let's put it that way from where we are getting in this morning. So, we'll see how this whole baby's going to shake out. That's what it comes down to, man. Because it's all about the U.S. dollar. The market's about the U.S. dollar. The commodity's about the U.S. dollar. And if we go over to the yen, I mean, this is amazing what's going on with the yen. The yen right now, that's trading 137.43. I mean, you talk about, this looks like it's going to make another leg up. Let me pull this up and see where we are here. It's amazing to me that gold isn't down a lot more. That's what my take out of today. That's my take. But what does happen in the gold market, no doubt, it can hang for a day and then all of a sudden it falls apart. But if we take a look at this yen, look at this yen, man. Let me bring this back. I got a feeling that they're gonna have to do something on this yen. Well, I guess the swing is the swing is going after, man. Yeah, the swing is going after is 147, man. We're at 137. The central bank of Japan, they were yapping when it was down, into the 125 area. They were saying they weren't going to let it get above 130. Well, we can see that hasn't done a thing. When you talk about business-wise, you talk about affordability. When you have a yen that is 137, it's quite expensive for them to import anything. That's the real bottom line. Now, export, that's up their alley. When you're exporting it, they can export a huge amount. And the next thing that you're going to start hearing about in the United States, of course, is the aspect of how expensive it is for us to sell product overseas. That's going to be, in the mix in a big way. Let's go look at that UUP, because the UUP, I was talking about that last week. It didn't do the TriStar Doji. Goes higher. There you go. You go higher and you have volume behind the move, man. There you go. Let's see. 4.6 million. Yeah, you could have another ABC app. Oh, my God. 27. This moves slow, but the bottom line, it kept moving in one place. So that's a point. That can get you 29.53 or 28.90. The extension of the dollar, there's no doubt about it. You heard Larry talking about this morning. The extension of the dollar it was a 1.618. I'm going to tell you, I haven't figured out why I didn't look yet when I was listening to this morning, 1.618. I can tell you, once you do a 1.618 over, an expansion or contraction, that's an immediate turn in the marketplace. The biggest one I ever seen, when the market went down in 2008 and the bottom came in, it was a 1 to 2 ABC structure down in the SPX to 666. That was the end of the market, meaning it was going up. I love those expansions that go to 1.618. You can get nervous, no doubt, but I haven't seen one. I think the longest I had to wait was maybe that one down there. I still had to wait a bit, I think, because I think it would hit the 1 to 2 ABC structure down before the 666. Stay right there, folks. We'll come right back. We have the Dow Industrials right now down 213. Nasdaq's off 274. S&Ps are off 50. Come right back.
technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Dow Industrials right now down 212. Nasdaq's off 270, 284. S&Ps are off 51. Let's go take a look at it because this, believe it or not, on a lost engulfing, folks, both ways is the way it's supposed to work, meaning that you're going to close at the lows of the day also, and we certainly are. So we'll see how this shakes out. Yeah, your first low that was established out here in the SPY today was 383.67. And we just hit 383.50. So that's set up. That's the bottom line. That is set up. We look at the Qs. What you have with the Qs out here. Yep, you're down 689 to 47 million. You're going into 56 million. Let's see, 287. Yeah. You certainly don't have a rejection of price here. That's as it's going. You don't have the rejection of price. You're having the contraction of volume, but that's about it at this particular point. And the SPY, the same deal. 47 million. You come in into 70 million. It goes right there. What's that number? That's 381.70. Yeah. You know, you might go a little lower tomorrow morning. My take is that we're going to reject these lows. Now, granted, Monday in the summer is slow, but I suspect what you're going to see in general is that this is summer trading, man. So it's going to be hard to get these volumes up as we go lower because of the fact that we went down so fast. And you're not going to have it on the way up. Because remember the bigger issue. The bigger issue, you're on an ABC structure on the way down. That being said, you're going to have to build a lot more cars to get to lower price, because the market's showing it. There's market showing that people aren't willing to just throw everything in right now. There's going to be more frustration before that comes down. Always remember, folks, the bear can claw your heart out, the bull can run you over, and thank God there's always another trade. Health, happiness, and prosperity. Have a great night, folks. Have a safe night. Come back and visit Tommy tomorrow morning. Kicks us off 9 o'clock in the morning. Great show, folks. We'll get him, folks.